Hello, you are listening to Germantown Community Radio WRGU 92.9 FM. Welcome to the Jumpstart Philly Real Estate Radio Show, a weekly radio program that spotlights positive real estate development and neighborhood revitalization throughout Philadelphia. I'm your host, Derek Hengemel. Jumpstart Philly is a unique community development program that trains, mentors, networks, and provides funding to aspiring real estate developers in 7 different Philadelphia neighborhoods, including Germantown, where the program was founded. Jumpstart believes that you can do well by doing good and focuses on removing neighborhood blight, scattered site rehab, creating a healthy mix of affordable and market rate housing, and avoiding gentrification through slow, steady growth and keeping wealth local. Interviews are conducted during Jumpstart Germantown's weekly Jumpinar series on Monday nights at 7 p.m., held via Zoom webinar. For more information about these events, check out the events page at jumpstartgermantown.com. This week, I will be speaking with Steven McAlpine, who is a branch leader for BB&T, now Truist Bank, about business banking and budgeting and how to manage business finances. I hope you enjoy the conversation, and be sure to check out the podcast version of this program at jumpstartgermantown.com/media. So Steven is a graduate of Indiana University of PA, where he earned a bachelor's degree in business management. He has successfully worked in financial services for 10 years with disciplines that include insurance, investing, and banking. As a branch leader for BB&T, now Truist Bank, his goal is to truly understand his clients' businesses and use that knowledge to help them gain insights and expertise to advise and help improve their performance of their business. Another goal is to create strategic partnerships where together we can work to grow your business. Outside of work, he loves music and is a musician, and his instrument of choice is the drums. He is a family man who lives to serve, hoping to inspire and build better lives and communities. So it's my pleasure to introduce Steven. And Steven, thanks so much for joining us tonight.
No problem. It's my pleasure. And I'm very excited about the opportunity provided this evening to be able to share a lot of great information to all of your attendees. And I just want to express a special thanks to you, Adriana, and all of the staff over at Philly Office Retail, and more importantly, Jumpstart Germantown, and all of the Jumpstart locations. So my pleasure.
Yeah, we're very happy to have you. And hopefully you'll be able to educate our community a little bit tonight about banking, which is arguably the most important aspect of any business, because to make money you need to be able to manage your money.
Absolutely.
But just before we get started, I think it would be helpful to say that we're kind of working through this workbook, or our discussion will kind of work through this workbook that you offer at BB&T, right? Kind of like just the basics of starting business banking as opposed to personal banking.
Yeah, absolutely. So, one of the things that we do here as an organization is we like to, share knowledge. And one of those ways we get a chance to do that is we'll put on seminars. The material that we're going to talk about today is essentially geared towards anyone, regardless of where you are from a business perspective, and how understanding how important it is to being able to manage your funds with a bank account and just some banking basics. Can actually help you grow and operate more efficiently. And this particular presentation that we tend to give is called Growing Your Business. And again, in my experience, I've found that a lot of business owners, regardless of where they are in the cycle of business, the life cycle of business, it's very important to be able to kind of cover these topics to ensure that you're operating efficiently and you're giving yourself the opportunity to really allow your business to grow.
Awesome. Cool. So before you grow your bank account, you got to have a bank account. So maybe we should start with the basics and talk about, what is a business banking account and how is it different from a personal bank account?
Yeah, absolutely. The ABCs of having a bank account is just understanding that it's really used as a financial tool to be able to manage and organize your funds. When it comes to your personal banking, of course, having an account is essential for you to be able to do things like, pay bills or, send money more efficiently and just access your money more safely and securely without actually having cash. So if you apply those same principles to your business, it's important that you be able to have a lot of those aspects available to you from a business perspective. So really, the difference between a business and a personal bank account is essentially all in the name. For your personal finances, you have a financial tool like a personal bank account to be able to help you manage those things. And from a business perspective, anything going in and out of your business when it comes to cash flow, operating expenses, it's going to be essential that you have a business bank account. And I can tell you, at the end of the year, your tax advisor would be very, very grateful, and your CPA would be very grateful that you did so.
Cool. So how can one open a business bank account? Is it as easy as a personal bank account? What are the nuances there?
It's very easy. And as a matter of fact, there's businesses designed to help small business owners that don't know the ins and outs of opening bank accounts, established to be able to, to do that for you folks. It's really as simple as understanding that from a business owner perspective, of course, you just need to know what your social security number is and have proper identification. Usually that includes like knowing your date of birth and, having an address. So an ID, any type of government ID would suffice from a personal ID perspective. And from an owner standpoint, it's also good to understand, what is the percentage of ownership. It's important for banks to know, who has a significant part in operating or exposure in that particular business. And again, that's from the personal perspective, like as the owner. From a business perspective, the only thing you need is essentially an employee identification number, and that's easily attainable by reaching out to the IRS. And the EIN number is what most people know it as an acronym, but it's basically your social security number for your business. Also known as your federal tax ID number. Also, understanding how it's actually defined. Is it incorporated? Is it an LLC? And just in understanding, the structure of your business, whether it be a partnership and things of that nature. So usually one would need physical ID, a letter from the IRS showing your EIN number, your tax ID number, and documentation from the state, whether that be a license or actual articles of incorporation or an operating agreement, clearly defining, the structure of said business.
So you said that's a fairly easy process to obtain these materials, but what's the timeline like on that? Is it something to start this week?
Well,
and this week, or?
I could tell you prior to COVID, it was a lot easier, to get some of these items. But one of the things that we do here at, BB&T now Truist is if there are individuals that are interested in looking at what that process, entails, we can actually help you to, a certain degree getting those things done. So when it comes to you getting the ID for the business, the first thing to do is to be able to know or to understand if that business name is taken. So you can go, especially if you're operating in the state of Pennsylvania, so website corporations.pa.gov. And I can give you guys, I can write that down later or, share that information, that particular website address again, in which you can actually search the name of a business if you have a particular idea. And as long as that name is available, the only thing you have to do is register it. Usually it takes about $125 if it's going to be like an LLC to actually register that business with the state. So as long as that name is available and you have that fee to actually, get that paperwork started. Again, prior to COVID, as soon as, the state receives that, usually I would say no more than 2 weeks turnaround time for you to actually get that paperwork stamped and those operating agreements mailed or emailed to you. I can tell you by having an account with the state, usually when you do that, it's a lot faster and more efficient if you do it all online, for sure.
Right. And
when it comes, go ahead.
I'm just gonna say that's assuming, you have an LLC already set up, you kind of have your whole business model set up.
Uh-huh.
That's not factored into the price. You got to have all that first, and then you can get going with the business bank account.
Absolutely. I mean, it's just like understanding what your business is, right? In order to go into business, you need to know what your market is. And it's the same, but there are professionals out there that are designed to actually make it very easy for you. Understanding that process is usually for the particular individual that is more hands-on and more conscious of being cost effective, I would say.
Cool. Sounds good. So now let's talk about, once you have it set up and once you came up with your really creative business name and you're starting to dissect your finances, how do you manage keeping those separate? Meaning personal finances and business finances. I'm sure some are fairly obvious, like your Netflix and your Spotify accounts go on your personal. But how do you make the distinctions on things that are a little bit more close to the center?
Yeah, it's actually very simple. When you think about it, I know it can seem a little bit more complicated, but when you think about what a business expense is, the very fundamentals of what a business expense is anything financially related to operating your business. And it can range for a variety of things. I like to keep it in very easy buckets that, when you think about real estate, depending on what it is that you're doing, right? If you need to purchase material, or if you're looking at inventory costs, if you have a team of laborers, it's employee costs. Mm-hmm. And more importantly, Uncle Sam needs to get paid. So being able to understand, how to use that to manage taxes. So taxes, material, inventory, employees, are all things that essentially go into that particular category. Now you can be a little bit more granular and talk about, the cost to travel. Or maybe if you want to entertain some potential clients, if you want to take someone out to eat, again, all of those can be considered business expenses. And just being able to understand that, there's financial tools that you can use to be able to keep those things separate, of which you already do use on the personal end. So when you're talking about that account itself, you can run everything through the business so that you can just clearly separate the two. When you're talking about using something as simple as a debit card, right? That debit card is essentially available for the business as well. And the debit card is usually just the most efficient way to get access to your funds. On the next level, when you're talking about building business credit, you may want to think about using a business credit card. And there's a lot of, options when it comes to, business credit cards, right? So think about, why you would use a credit card over a business debit card. One thing I would say first and foremost is security. When you're talking about 0% liability, of course, if there's something that's happening from a transaction standpoint that you don't approve, most organizations are going to offer you that protection when it comes to using a business credit card. And essentially, it's not you using your funds, it's using the bank's money to be able to operate and then paying that money back. So, I would say those are three basic ways to essentially separate and manage those type of expenses. But yeah, just thinking about what those expenses are, I can actually send you guys a budget sheet that will give some ideas in terms of what that is. But when you think of it on a real basic level, it's just understanding every penny that is used to operate your business is what we be considered a business expense. Everything else would be considered a personal expense.
And what are the consequences, if any, other than just making it harder on yourself of poorly managing those two types of finances? Could you get yourself into hot water and starting to use your business expense for personal finances or vice versa?
Yeah, absolutely. I would say from a tax perspective, that's one thing that's very important, understanding how to separate the two and, the ramifications of not doing so. Also, of course, I'm not a tax advisor, but I would encourage you to talk to your tax advisor to be able to understand all of the ramifications that come along with not doing, making that clear delineation. But there's a lot of advantages as well. We're talking about write-offs and things of that nature that, having something simple as a reporting system, when you think of it, right, to be able to show and organize that information so that you are in a position to benefit and not be penalized. It's of course, no one ever wants to be penalized for not paying their taxes or, of course, everyone wants to be rewarded for being able to take that time to organize. So, yeah.
Cool. Great. So let's move on to another topic here, and I'm sure I've heard this word. It's kind of a buzzword, I feel like, in the business world. Is cash, and how important cash flow is to a bank account. So tell me a little bit about why that's so important, and really just what is it? Like, what does having cash flow mean?
Absolutely. Cash flow is in most businesses, especially when you think about 2020, right? It's a different type of year. No one really, kind of foresaw the impact of the coronavirus. And a lot of what you heard in the news is, funding from the federal government to keep some of these businesses alive. When you think about, the type of businesses that actually are operating heavily with cash, it's the heartbeat of your business. And regardless of what type of business it is, cash flow is going to be very important. So, from a basic understanding, there's foundations that we kind of categorize cash flow as. And what I would say from a definition standpoint, it's essentially the inflow and outflow of money from your business. And it's vitally important because it's used to cover, those daily operating costs that we talked about earlier. But some foundations that we kind of take a look at when we're talking to our clients and are, how you collect money, right? So when you think about real estate, if you have tenants or, just thinking about tenants, what options are you giving your tenants to pay you? How are you collecting it? Is it cash? Are you allowing them, understanding that we're in the 21st century? Is there a way for them to pay you with like a credit card on some type of online portal? Just understanding, giving people options to be able to collect money or giving your clients options to collect money to be able to pay you will help you attract and retain a lot of business. The second foundation I will look at is how you're making payments as an organization, right? So when you're talking about how you're paying your bills, how you're paying for your expenses, and how you're paying for your employees, understanding that sometimes there's some gaps when it comes to cash flow, right? If you're working or taking on a new project, it may cost you X amount of dollars to start a new project, and you may be cash strapped until you actually finish that project and are able to collect your return on your investment. In that in-between time, we call it, your pay cycles or, 30, 60, 90 days, whatever that looks like for your business, that cost for you to take on a new project versus the time for you actually getting paid for completion of that project, you're going to want to have some cash flow available to you to be able to take on new business when we're talking about positioning yourself to be able to grow. So understanding, some tools that you can actually put to your disposal to be able to be more efficient in that cash flow cycle is very important. Another foundation we tend to cover is how you're managing, investing, and protecting your money. So as you're growing as an organization, right, you're going to want to make sure that the money that you are earning is working for you. So when you think of those three type of foundations, you want to make sure that you have a good definition of those on behalf of your business.
If you're just tuning in, this is a conversation with Steven McAlpine, who is a branch leader for BB&T, now Truist Bank, about business banking and budgeting and how to manage business finances. Thank you for listening to the Jumpstart Philly Real Estate Radio Show on Germantown Community Radio, WRGU 92.9 FM. I hope you're enjoying the discussion.
Cool. So in short, cash flow isn't really how much money you're spending or how much money you're making. It's more so just the activity of your business, kind of, right? Like how active the inflow and outflow is, right? It's kind of a weird concept because good cash flow doesn't necessarily mean you're making a ton of money, right?
Absolutely. Now, when you think about, making money, right, it's not how much you spend, it's actually how much you keep. Mm-hmm. So, three things that I like to ask my clients when I'm talking to them is, think about it. When you list all of your expenses, try to identify what your biggest expenses are. And again, thinking back to, last year, a lot of small business owners had to really ask themselves what that is. And the next most important question is, how can you cut costs, but still be efficient, right? So, personally, when I look at my budget, the first thing I'm looking at is how much money I'm spending on food. So, those are still some things that you can be a little bit more, flexible with, and, you can cut a little bit in those particular areas. And last but not least is, ways to optimize your accounts, your payable and your accounts receivable processes. So again, just understanding, how you're operating and what those gaps look like. So I would say it's a multi-variable. Well, it's a very complicated way of saying it. It's very, very interchangeable when you're talking about what it actually is. It can mean multiple things depending on what type of business that you're running.
Cool. So we're actually doing good on time right now. So if you want to just kind of go a little bit more into what you just said there, you're saying gaps between accounts payable and accounts receivable. What does that mean? Maybe for people who don't really are familiar with those terms.
Yeah. So when you're talking about accounts payable are things that you have to pay. Okay. Accounts receivable are outstanding items that you have yet to be paid for. So when we're talking about growing your business, there's different types of tools that you can, put to your exposure from a lending perspective, right? It's really getting into the type of conversation of different types of loans or different type of credit products that you can utilize as a business to help you be more efficient. So one thing I did say earlier is about that understanding what your operating cycle is, your cash flow cycle is. If if it costs you, X amount of dollars, 50,000 to start a new project, and you only have 100,000, in the bank account, realistically, depending on what your turnaround time is, you may be able to bring home 200 on that $50,000 investment, right? But if you only have another 50,000, that means you can only, provided that next project costs the same amount, you only can take on one more project. So it may be 2 years for you to actually realize your return. You're going to want to make sure that you have some cash available to be able to take on more projects. So that time from when you actually have to pay a penny to start a project to when you actually get paid for completion of said project is going to be what you want to evaluate from a cash flow perspective. Cool. So again, just understanding what that is, taking it back to the very beginning of just being able to organize those type of expenses and being able to show that to your accountant will help position yourself to grow when you start to really create real definitions and have real, clean accounting when it comes to those type of expenses.
Cool. Yeah. So it sounds like cash flow is just a really good way to kind of look at a playing field where it's like, you're going to be spending a lot of money over here. You got to start making money over here. Kind of like that.
Absolutely.
Cool. Awesome. So next thing I want to ask you about is business insurance and where that plays into having a business bank account. Does every bank account need the insurance? Or sorry,
it's not
every business need insurance. I missed it. My bad.
Yeah, that was a great question. So, most bank accounts are federally insured when it comes to having your money in the bank. So when you're talking about safety and security, understanding that there is insurance even on the money that you have in the bank. But to answer your question, insurance is essentially very important. When you think of it, like, what would happen if, you're not there to be able to take care of the business? Do you have protection in the event that, maybe you lose a key employee? Maybe that particular individual, is the life beat of your business, and without them, you can't open your doors. So thinking of things like that, right? There's an insurance called key person insurance. You can actually have insurance on a person that's the most vital piece of your operation. Thinking about, real estate. Someone slips and falls on your property, or, you have an employee that's working on your property and hurts themselves while on the job, having protection to be able to cover your business in that type of situation is very, very important. I've talked to several business owners that didn't understand or look at it that way. But I'm pretty sure in this group, you guys do a great job over there at Jumpstart, being able to share with them all of the, the key pieces of, real estate. I know you guys know how important that is. So when you just think about that, right, it's just understanding that quality is better than, just essentially trying to, cut costs in that particular area, because you just want to make sure that you're adequately protected in any type of situation. So, yeah, I would say, it's very important. Me personally, understanding that was the first thing I did out of college. I want to say it's very, very important.
Great. And where can people look to get that business insurance? Is that something that the bank can make the connection with, or like
yeah.
where?
So again, of course, the beautiful thing about our particular organization is that, we specialize in insurance as well. We have our own insurance company called McGriff. And essentially, we're in a position to be able to essentially cover you in multiple areas. It's really just understanding how, you get quotes and making sure that the type of business that you have is being quoted properly, and being happy with the type of coverage and the costs that is going to, cost your organization to ensure that you feel adequately covered in any scenario.
Cool. Awesome. Thank you, Steven.
No problem.
On to our last little section here before we get into the live Q&A, which I see a couple questions came in. But if anybody wants to submit any more, you can use the Q&A tab at the bottom there. Be sure to type them in there, and we'll get to them in about 10 minutes or so once we wrap up here. So the last thing I want to talk to you about is borrowing money, which is something that I feel like is particularly a big question in the real estate development world, because getting into a development project is no cheap expenditure, and
absolutely
everybody on the first one or first couple ones are looking to borrow money since they don't have, like we said, the cash flow to back it up. So what ways can a business borrow money, and what are the different types of loans and benefits that come with them?
Yeah, absolutely. So there's several, and depending on the type of need, a good financial organization will try to match the product to your particular need. And what I mean by that is, just to kind of keep it very simple, you have a regular loan, like a fixed rate loan. You may have, which could be like termed. So for instance, if you're purchasing, a piece of equipment or, a fixture in said business, or, just thinking of real estate, right? I want to say if you want to purchase like an oven and like a range and microwave combo, right? I don't know. Depending on how, expensive that is, whether it be from a commercial use or residential use, you may want to say, okay, it costs me X amount of dollars, but I don't want to pay that all up front. I want to pay that over the next 24 months. So a fixed rate loan will help you kind of budget that for the next year or 2 years in this case, so that you don't have to pay all that money up front. So you're talking about fixtures, things that aren't going to fluctuate in price that you can budget over the course of time. That's a fixed rate term loan. Other type of loans are,
I just want to be clear, like a fixed rate loan is something that you wouldn't use for like the acquisition of a property, right? Because that's something that's totally subjective in price, right?
Not necessarily. So again, when you actually agree on whatever the price is that you're looking to purchase it at, you may agree to pay it over the next 15 or 30 years. So that type of purchase is really a large purchase that you want to make sure that you don't have a lot of fluctuation in a rate. So you would rather get again, depending on the type of buyer you are, it may be more advantageous to get a fixed rate loan on a large purchase like a piece of property. Again, you can pay it off sooner or you can pay it off on schedule. It's just understanding that you're not going to have a whole lot of fluctuation in which your monthly expenses towards that particular item over the course of time. Yep. Yeah. Some other types, you have secured loans. Okay. And basically when you think of secured loans, it's essentially a loan that's secured against an asset. And they call that asset or a particular item collateral. And what that does is it gives the bank some security, which is essentially the lender. And you tend to get better types of rates when you secure a loan against a piece of collateral. Excuse me. In this case, real estate. Real estate is a great piece of collateral that usually will get you very favorable rates in order to be able to finance. Unsecured loans is essentially loans based off your credit worthiness, okay? And they're usually obtained without the use of collateral. And because of that, they tend to be a little bit more expensive. So understanding, credit and how important it is to ensure that your credit is in tip-top shape is very important, because again, as your credit suffers, it's going to become more expensive for you to actually borrow X amount of dollars, because you're looked at as, I guess, in the eyes of the lender, more risky. like, the chances of you paying that back is just slightly less than someone who may be more credit worthy. When you think of, equipment, again, it's essentially exactly what it is. It's an equipment loan. So, it helps to finance the cost of equipment by spreading out the costs, one time. You can lump sum extensions or, credit paid through periodic consistent installments. So again, when you think about equipment loans, this is essentially, loans specifically designed to be able to pay off equipment used in your business. And you have revolving lines of credit. These are beautiful items to have when you talk about cash flow, right? So, you think about it in terms of a credit card. When you have something like, a credit line for your small business, you usually can get a lot more, depending on how much income you guys are bringing in on an annual basis or a monthly basis. Usually lenders will, multiply that number and give you something called a credit line. And essentially that's something that you can borrow from and help, fill those cash flow gaps in your operating cycle to be able to pay for things like, payroll expenses or, material purchases, or maybe the cost to actually take on a new project until you actually get paid on a previous project that you finished up. Those funds can be borrowed from and paid back and wash, rinse, repeat. So it's essentially, understanding how important it is to organize everything so that you can qualify for all these type of loans and these particular products. And last but not least, we have SBA loans. So SBA loans that are guaranteed by the Small Business Administration. When you think about the PPP loan, that's exactly what that is. Usually you'll find an approved SBA lender, and Truist Bank is one of them. Usually we'll be able to help facilitate those particular transactions, understanding that they have a government guarantee. So usually those are from, lenders that may not have been in business for a specific period of time, but they're essentially creditworthy enough to get financing from the government. And usually those type of organizations may not qualify for traditional type of financing. So it's a way for the government to really step in and really help, small business owners or newer business owners or even established business owners, get the funding that they need to help grow their business.
Awesome. Yeah. Thanks for providing multiple angles at which you can borrow money. But from my understanding, not all those things are available to you right out the gate, right? Those are kind of things that you have to establish to prove that you're trustworthy enough to acquire them, right?
Absolutely. And again, when you think about just having that financial discipline, understanding that, the first step is to get a business bank account to start separating those type of finances, you're already taking steps in the right direction in order to get the type of financing that you need eventually. I would say a traditional way, again, depending on the need, right? There's no, silver bullet here in terms of, how to get the type of financing. It's just really, understanding your particular need as an organization. And that's one thing we do here at Truist, especially myself as a business banker and a branch leader, is I really take time to sit down with my clients and really get a good understanding of what their operation and what that looks like so that we can actually tailor a particular package, that's actually help that'll put you in the best situation to meet that financial need. So yeah, it's some of these particular loans that I mentioned may not be easy to acquire right away, but when you have a newer business, it's always a possibility, depending on how you structure that, depending on how you put together projections. You can always get an SBA loan, provided that you have the boxes checked for that. And we, again, as an SBA approved lender, that's one of the things that we do help our clients do achieve or obtain very early on in the stages of their business.
That concludes my conversation with Steven McAlpine, a branch leader for BB&T, now Truist Bank, about business banking and budgeting and how to manage business finances. Next week, I will be speaking with Jennifer Tintenfass, a real estate and finance lawyer at Royer Cooper Cohen Braunfield LLC, about opportunity zones and what makes you eligible to benefit from them. The interviews on this program are recorded during Jumpstart Germantown's weekly Jumpinar series, which takes place via Zoom webinar every Monday night at 7 p.m. If you'd like to participate in the live Q&A with our guest, be sure to head to jumpstartgermantown.com/events and register for next week's Jumpinar. If you're interested in starting a Jumpstart program in your own community, you can visit gojumpstart.org to see our how-to guide and open source training workbook. Thanks so much for listening to the Jumpstart Philly Real Estate Radio Show on Germantown Community Radio, WRGU 92.9 FM, and be sure to tune in next week.